man, we could be days away from an almighty rug pulling by Jerome Powell Bitcoin, pulling back here on the week down over 1%, showing weakness below that 30,000 level mark. And Jerome Powell has his FOMC meeting just days away, and he could rug crypto. Things could get horrifically nasty. Markets are pricing in almost to certainty, 99.2%, that he's going to do a 25 basis point rate hike. What impact could that have on the markets? What impact could it have on Bitcoin? And what's my game plan? I'm going to be breaking that down and a lot more in this video. Smash up the likes. If you want to buy any cryptocurrencies, you can do so. Ijaz.uk/buybit. And of course, that supports the channel. Guys, check this out. Bitcoin here is struggling, right? Another red week here, pulling us down 1.16%. And you guys can now see we're below the all-important 30,000 mark. I called about this last week. I said, guys, you've got the EMA ribbon sitting here at 27.5. Are we going to need to come all the way down to 27.5? That's what we're going to analyze right now. Now, the first thing we need to understand is what caused the weakness in the Bitcoin price this week, because there weren't really any major headlines. But what we do notice straight off the back, which we covered off a couple of days ago, is this dollar index. Right, this dollar index has shown tremendous strength here this week, pushing ourselves up. But what did I say? It's still in a bearish pattern, and that's the saving grace right now. The only thing that's going to save the dollar index here is Jerome Powell. So if we look at the dollar index, it broke down from this descending triangle. Again, if you're not familiar with this Ijaz.uk/TA, you would have spotted this pattern without these videos. And as you can see here, this pattern brings it back to retest. So remember, with a retest, when you break down, sometimes you get a retest where you go and test what was initially the support and turns into resistance before you then get pushed here to the downside again. And that's what we're going to want to see on the dollar index. As Bitcoin bulls, we're inversely correlated to this. We need to see this get rejected and move to the downside. But the dollar index will be desperately looking for Jerome Powell to come and save them and rug crypto. If Jerome Powell comes out and delivers at 25 basis points, could this impact the markets? Could this shudder Bitcoin down well below 30,000, down towards our next support levels, where we know we've got a little bit of support here, of course, at 29,000. Then you're looking at 27.7, and we start to get to some of our buy zones, which I'm going to share with you shortly. And that's the risk right now. Jerome Powell's going to be coming out. We know that we've had CPI coming to the downside. We saw all forms of inflation, including the producer side, coming to the downside. Labor continuing to remain quite strong. Right, so to all intents and purposes, Jerome Powell is managing to maneuver a soft landing. But here's the thing. If Jerome Powell has room for a soft landing, it could be that he decides to finish inflation off. So whereas before he was deciding to pause, to see how the economy was getting on, to see the progress, to make sure he didn't damage anything, that's why we had the pause last time around, he may be coming in hot and saying, you know what, labor's strong. We're nearly there. Inflation's coming to that 3% level. Let me get it. Let me finish it. I may not get this opportunity again. If I mess this up now, if I fluff my lines now, I may mess this up and we could have entrenched 3% inflation where I have the opportunity to really get to 2% and show the whole world that I did it whilst Europe is struggling, UK where I'm struggling. And what that means for us is more short-term pain here, which could provide us opportunities for crypto to get rugged and for us to get our DCA entries. I'm going to share those with you guys, what I'm looking for in terms of a price point. The market's expecting 25 basis points, right? Remember, as traders, as investors, we want to look for the bit that the market has not priced in. So make sure you stay tuned this week as we cover this off. Wednesday is the FOMC meeting. So when they have the FOMC meeting, we'll live stream it. There'll then be the press conference. And in that press conference, we want to listen for any hawkish tonality. Does he give us any clues about another rate hike thereafter? Because the markets here are saying 5.25 to 5.5. And the next meeting is quite a big gap to September. And they think we're going to pause. Okay, so the market is saying we're going to go one now and then we're done. Nothing, right? Nothing through August, nothing September, and we're going to be chilling. That's what the market expects. If we hear anything that he says, no, we might need another rate hike after this as well, that could shudder the markets even more. And what I mean by shudder, let's look at some of the levels here. Let's jump down here into the daily chart and really start to understand where we're at. We could not break for resistance, right? The first argument here is 31.5, 31. We just could not break through it. This chunk of resistance here, which of course we know is huge level of resistance on the weekly time frame, we couldn't get through it, and therefore we could not activate our price targets of 37 and 45. And again, we know there are a lot of patterns which are showing this, right? My favorite pattern, which I've been sharing with you guys over this period of time, is this big cup and handle pattern. The cup and handle pattern with neckline sitting in that 30 to 31 range. but we couldn't break past it. Look at this couple of weeks we spent here, 4 weeks, a month here of just not breaking the neckline. And the risk that always forms when you don't break a neckline, I'm going to show you this right here, is you end up forming a double top pattern. We went up once, came back down, go up again, and we come back down, we can get rejected. Not fun, right? That's going to be an M pattern. That could shudder us here to the downside. And so that's what I'm looking for. I'm looking for this leg down here. And Jerome Powell may give us a catalyst here to move to the downside. Now, of course, even though I don't think it's likely, we have to plan for the alternative as well. And that's that Jerome Powell gives us a surprise. What's the probability that he now comes out and doesn't do a rate hike? He goes, you know what? We're on top of things. I'm not going to take this opportunity to finish inflation off. I'm just going to keep pausing. Market's not expecting it, right? Market is not expecting him to pause and stay paused right now. No, they're expecting 25 basis points. If he did that, we would get an almighty rally. We would get a powerful rally here, and this common handle pattern could play out. It's a very, very fringe possibility. I don't think it's going to happen. More likely he's going to rug us. More likely he's going to do 25 basis points and come out hawkish to finish the job. Remember, markets, naturally, they can see the data. We get the CPI data. We get the labor data. So investors and markets and the NASDAQs, they start to rally, right? They start to rally and risk starts rotating back on because they can see, oh, look, things are starting to look positive. And so Jerome Powell is going to want to jawbone, and that's where he gets the market to tighten up for him. So he's going to want to do that. He's going to want to make sure that financial conditions remain tight. He's going to want to keep his foot on the neck of the markets so he can finish his work back off, even though he pretty much knows he's nearly there, right? He can't let us off the hook. So that's what I'm looking for here is, do we get that pullback? And the region I'm really looking out for, and you can see here, guys, even on this daily chart here, we really did break down from this bull flag as well, right? Broke down from this bull flag. You know that even breaking down from here, look how little support there is on this daily time frame. The support comes down here at 28,000, right? If you're looking at this view. Then you got next support here at 25.4, which we'll come on to shortly. And the other chart I like to look at is this. And this is what's given me the broad structure of my current DCAs. You can see there I've labeled my entry points there in that red rectangle. And this is the chart that I'm looking at, right? I'm looking at this channel. I can see us hovering in the middle here. And I'm just wondering, do we want to come back to this bottom support line? Are we going to come close to this rectangle? And there's no guarantee that we're going to come into this rectangle. But for me, I'm using this as a directionality, right? As we get closer to this, my nibbles need to be getting more ferocious. And so for now, I'm nibbling, but I'm nibbling very lightly. If we get to 29.5, I'll nibble a little bit more. If we get to 29,000, which we know is support as well, I'm going to buy a little bit more. If we fall below 29, a little bit more, right? The bites get heavier. So again, if I had, let's use easy numbers, if I had $1,000 to DCA right now, I'd be nibbling. I'd be nibbling in chunks of 50 and maybe 100. But if we fell to below 29, if we get to close to 28, I'm going in 150 chunks. I'm going in 200 chunks, right? If we flash crash down to 27, I'm going in 500, 400, right? I'm going in bigger chunks. That's what I'm talking about here. So I'm looking at this rectangle. The rectangle sits at 28.6, down to the bottom here, roughly at 27.1. And I don't think we'll need to get down to 27.1, but it's important to see that because that's where this trend line is sitting. So I'm looking to basically DCA more and more as we head to this level. But again, a lot of this depends on the dollar index. You can see here on the daily chart here, dollar index really just have a strong week. Look at that. Rotating here, moving to the upside. Now we need to reject it. We need to say, nope, you're not going there. Boom, send it back to the downside. And that's going to come from Jerome Powell reminding markets that risk is on, right? But that's what we have to look out for. Are we going to see from the data that we get this week that risk can rotate on? Remember, we do get the FOMC meeting. On Thursday, we also get GDP, Q2 GDP. So we'll be looking out for Q2 GDP preliminary. And plus on Friday, we get PCE inflation. Don't forget about that. And consumer sentiment readings as well from Michigan Report as well. So we'll be covering all that off on the channel. These are the keys catalysts for this week. And I will be looking for opportunities to DCA. That's what I'm doing right now. I'm looking for these opportunities. I feel like the market doesn't have enough momentum right now to play out this bullish cup and handle pattern. It doesn't feel like that momentum's there. What's going to cause that market to shift is if Jerome Powell gives us a pause or he gives us a clue of when we could pause. More likely, as I've just shared in this video, I think he's going to use the opportunity to get us to finish the job off. And therefore, I can see a couple of more months of pain, maybe giving us another opportunity to DCA. And that's what I'm looking for. Hopefully you guys enjoyed this video. If you found this useful, smash the likes. Don't forget to subscribe. Make sure you go watch this interview, the Michael Kong interview, guys. 1 hour, 14 minutes, confronting Michael Kong. What happened with the $200 million multi-chain hack? Was it a hack? Was it a rug pull? What happened? I confront him and ask him all your hard questions from the community, direct and unfiltered. Go watch that, and I'll see you in the next one.